Hi there, I'm Sam Meredith. Now, with a range of European countries releasing manufacturing PMI data yesterday and services PMI data due to come out tomorrow, we're having a closer look at how things stand in the euro area by speaking to Stephen Webster, Director at TopEcon Consulting. So Steve, this morning we have seen that Spanish unemployment change data fell twice as quickly as many had expected, coming in at minus 118.9 thousand through April. As the fourth largest economy in the euro area, how significant is this in terms of Spain's overall economic health?
Well, I think it's encouraging, but the fact remains that the unemployment rate in Spain is 23%, and it's the second highest unemployment rate in the eurozone. And perhaps even more worrying, or just as worrying, is the fact that youth unemployment is still around 50%. So I think it's an improvement, but in underlying terms, it's not going to make a massive difference on the unemployment rate totals. More significant in terms of the economy as a whole is with the figure for Q1 growth, I think, of 0.9%, which from 0.7% in Q4, which, albeit from a low base, is showing that the economy is actually now beginning to improve.
We have seen this week that many European countries have posted manufacturing PMI data for April, with only France so far posting an economic contraction below 50. Collectively, how does this contribute to market sentiment for the euro area?
Well, it's positive, but guardedly positive. The thing is that what we need to see in the eurozone is a sustained expansion, and at the moment that is in the balance, I think, because you mentioned France there. Well, France, there's no real signs of a turnaround in France. It seems to be like a deep-seated weakness in the country, and of course you've got Greece as well, which has the potential to upset sentiment at any time. In fact, that particularly is in the balance, and what I would say is that it's still very reliant on Germany continue to grow very strongly, and that being the case, I'm positive. I would say I'm positive overall about the eurozone outlook, but it is possible that it could, it's not going to be that straightforward, and the road to recovery will be a bit up and down, and a bit bumpy, as it were.
And lastly for today, the UK election is just 2 days away now, which has certainly been circled on the calendar. But which other leading indicators for the euro area will you be keeping your eyes on in the short term?
Well, similar to the manufacturing PMIs that came out on yesterday, tomorrow you've got the services PMIs, and the services PMIs have been running more strongly than the manufacturing PMIs. These are the final numbers, so they should, broadly speaking, confirm the positive numbers which we had in the middle of last month. But they are certainly quite an important leading indicator. And again, they do vary quite a bit in terms of actual the strength from country to country. Aside from that, I think one quite important number on Thursday, I think it is, yes, there's the German factory orders numbers, which are a leading indicator for Germany. And they are very volatile on a month-by-month basis, but recent orders numbers from Germany have been been downbeat, and one would hope from quite a marked improvement in German orders on Thursday to actually buoy up the underlying trend and to basically reassure people that Germany is not fading in the near future.
Thank you, Steve. That's everything for today, but do check back with Duca Scoppi for more updates throughout the week. Goodbye for now.